Let's give it a minute, yeah?
Yeah.
Cool.
All right, Tunila, are we ready to go? Are there more people coming in?
It seems that people are still signing in. Let's just give it 1 minute.
Give it a minute, sure. All right, shall we go?
Yeah.
Tunila, are we good to go?
Yes, we can go. Those that are signing in late, they'll see their recordings after this one.
Okay, fantastic. All right, good morning, everybody. I'm Kieran Ryan here from MoneyWeb. I run the MoneyWeb Crypto Podcast, and we're going to be talking today about market conduct risk from a crypto perspective. And we have two experts to help us through what is becoming quite a challenging maze of regulations and risks. We've got Greshan Naidu, Senior Privacy Officer at Valor, and Greshan will tell us in a minute exactly what that means. Valor is South Africa's largest crypto exchange in terms of volume. And we also have Shiven Mudli, CEO of financial advisory company called Novake. Good morning to you both, Greshan and Shiven.
Hey, Kieran.
Hi, Kieran, and hi to everybody on online right now.
Greshan, let's start with you. Very briefly, for people who don't know, and I suppose people by now would know what Valor is, but you might have to just tell us. And what exactly is a data privacy officer?
Okay, awesome. Thanks, Kieran. So yeah, welcome to everyone. And yeah, I'm Greshan Naidu. I'm from Valor, which is a crypto exchange in South Africa. As Kieran mentioned, we're one of the largest crypto exchanges in South Africa based on trading volume. I work at Valor as a data privacy compliance officer. I work in the compliance department, specializing in a lot of legal, looking at a lot of regulation and applying it to our company, helping to protect our customers. Also looking at our data, protecting our personal information of our clients that we have on our systems, ensuring that when you trade on Valor and you use our products, that your data is in a safe place, it's secure. And one thing that we do take pride of here at Valor is data security and protecting your personal information. Security is very high at Valor. We integrate security in a lot of the discussions and meetings we have at Valor. Valor is also growing quite largely. We're expanding not only in jurisdiction but also in our product offering. Lately, as for those of you who don't know, we're offering currently right now crypto bundles where you can purchase a set of crypto. Currently, we're calling it the top 10 bundle, where you can purchase a set of crypto and trade it as a bundle. And we're also offering lending services, staking services as well on our products. We have an OTC desk. And also recently we have a partnership a really fun thing is that recently we have a partnership where we're working with the Stormers, sponsoring the Stormers team. And I think another important point is we also have an app called Valor Pay, where you're allowed to make transactions in crypto purchases, especially at Pick n Pay, by scanning the QR code. And you're making purchases directly with crypto. And Valor believes in a financial ecosystem and a financial system for all. We're very customer centric. We love our customers. We want to create a system that focuses on the oneness of humanity. So if you're not very familiar with Valor, go on our website, download our app for as little as 100 Rand, purchase some crypto and start trading.
Thanks, Greshan. Shiven, tell us about yourself. We know each other for some years now. You're a macro strategist. You come from, I guess, a traditional financial background, but you've pivoted into crypto some time ago. And tell us, what does Novaq do?
Yeah, thanks, Kieran. So hi, everyone. So Novaq overall is a venture growth and market intelligence company with a combination of advisory. And over my last 10 years in corporate investment banking side, as well as asset management, I've brought that sort of that theoretical work into applying it into how the current financial system is changing. And with that, the team, we really put that theoretical work into application of how risk is evolving, how we're looking at on-chain activity, the data analytics behind it, and how you can translate that information into regulatory guidance, into technology developments where people are building technology in blockchain to service South Africa, as well as the growing need for market execution. So looking at, I would say, price discrepancies and a lot of information in the capital markets, translating that into actionable insights for treasurers, for corporate CFOs, as well as FMs, and the regulatory people that are like on this call, for example. So yeah, that's what we do, and it's myself, and I lead a team that we have specialized skills in a variety of sectors, technology and regulation, and yeah, we aim to just bring the world into the light of crypto.
Great. Thanks, Shiven. Anybody listening in, if you have questions, you can raise your hand or you can just put a question in the chat and we'll get around to that towards the end. So we'll carry on here for about 35 minutes and then open up for some questions after that. Let's start now. We're seeing banks move into the crypto space. Greshan, I'm directing this at you. The banks have gone from hostile to warm when it comes to crypto, and they've done that in the blink of an eye. And so that initial hostility was based on perceptions of risk because crypto was perceived to be a playground for criminals and fraudsters. That was partially true. I mean, we had Mirror Trading International, which was our own organic South African homegrown fraud, biggest in the world back in 2020. Since then, there's been a change of heart. So talk about what the banks are doing in the crypto space and why this change of heart.
Yeah, so I like the use of the word that's used, change of hearts. It's a nice phrase to use because there's certain things that we understand from a legal perspective, that's binding by law as an obligation, nice to have, should have. And sometimes there's something called a change of heart as well. So I think I don't want to touch on regulation right now, but I think just to give a quick broad overview, and I keep it in plain language for a lot of the people on this call to understand. So I think what's going on is crypto was previously crypto was seen as, we were knocking on the door, trying to get in, saying, we have this wonderful technology, we'd like to expose it to the world. Can we get in the door? And it was more of like, can we be a part of this system? But now recently, I think the technology is moving faster than we can explain it or regulate it. And it's kind of forcing the adoption of the technology. And why blockchain and distributed ledger technology is so important is that it has a good use case where transactions are faster, cheaper, and it also has a record of the transactions on the blockchain. So the transaction data is always there. Reason why I'm mentioning this is that, again, the technology is growing. It has a good use case. So banks are seeing this. Financial institutions are seeing this. Merchants are seeing this. A lot of other players in the economy are seeing this, and they're trying to integrate crypto into their workflow. They're trying to create products where you can make payments with crypto, where you can invest in crypto, where you can learn about crypto. And this is kind of a way in saying which we are now being accepted into this community. And I think it focuses a lot on, like what I said earlier on Valor, where we want to create the oneness of humanity, togetherness, working together to achieve this objective. So I think where we can integrate crypto as much as we can into the banking environment, we should do. I see a lot of adoption around stable coins. I see a lot of partnerships with payment providers, TPPs, and that sort of thing happening. And a lot of people in the crypto world also have this thing about regulation, where they feel regulation is very onerous. It's costly. It focuses on a lot of operations, but I want the crypto community to remember that if regulation is being put in place, it's giving you permission now to use this product. It's giving you a mandate now to say, hey, now you're welcome into the system. You can use this product, but obviously do so responsibility and do so to protect our customers. So it's, in a way, it's saying, let's all work together to transform the financial system and include crypto in it. So I think banks' adoption of a lot of crypto-related functions in that activity happens because the technology is developing so rapidly, but it needs to be used responsibly because of regulation.
Right, Shivan, you got anything to add to that?
Yeah, I think when looking at the banking system right now, where if you're on the call and if you're new to crypto, or if you're sort of a legacy in the space, you'd know that crypto as a broad term is very opaque, fundamentally because there's so many avenues in which blockchain technology fits into banking, whereas crypto is just one simple part of the ecosystem. And I think when we're looking at it now, this change of heart has come from the velocity in which stable coins have really come into the market, and everyone's really looking at, yes, payments can be improved. We no longer have to pay 40% to pick up some kwachas or liquidate some kwachas or get into the naira. I think that's where a lot of this technology is slipping into.
Okay, Gresham, back to you. I mean, just talking about the banks for a minute, let's stay on that. Last week, we had FNB tying up with MasterCard for cross-border payments, accessing, I think it's about 150 or 155 countries. Their press release didn't specifically state it, but it's quite clear that this is built on stablecoin rails. Stablecoin has huge advantages for banks. We've also seen ABSA tying up with Ripple, and we've seen crypto exchanges in South Africa that were previously denied banking relationships now being openly invited to come and open bank accounts. And I'm talking there about Nedbank and Investec and so on. So that's the change of heart that we're seeing here. But and Discovery and Luno, that's another one. There's another relationship there where you'd be able to buy crypto on your Discovery app. And this is kind of something that's been predicted, but it's happening very fast now, Gresham, that you're getting these banks, and FNB hasn't done it yet, but I'm pretty sure on your FNB app, you'll soon be able to buy crypto as you will with many other banks. Is this the way that you're seeing it going?
Yeah, I do definitely see it, that's the way it's going. And as I said previously, the technology is evolving faster, so there's a good use case for it. It's efficient, it's fast, it lives on the blockchain. Also, the fees, also if you're using stable coins as well, the fees to transfer it is quite cheaper than you would do at a bank if you're going to be using $1. Also, for those who don't know what a stable coin is, a stable coin is basically a cryptocurrency that's pegged to a fiat currency. Like, for example, you have a cryptocurrency that functions like a dollar, which follows the dollar, so it's pegged 1-to-1 to the dollar. So if somebody wants to send now dollars to somebody in a different country, they can do that much more easily with a stable coin. So sending now currency across the border is much more quicker than it used to be, much more cheaper too. And I think that the adoption right now is coming from stable coins a lot, because stable coins resemble fiat currency. You got dollars, now we're getting a ZAR stable coin. So a lot of ZAR stable coins out, but I think it comes from the fact that it's closely mirroring the fiat type of currency. Hopefully it will go more deeper in the future as people start trusting crypto more and more and adopting it more and more. Other cryptos will come into space, and maybe the banks will start integrating Bitcoin as well. Who knows?
All right. I just checked the market capitalization for stable coins this morning. It's about $300 billion. And there are actually hundreds of these stable coins. I didn't realize there were so many. The biggest are Tether and USDC, which are pegged to the US dollar. You did mention that we've got a couple of ZAR, South African Rand stable coins. There's one issued last week. It's called ZAR Supercoin, issued by Super Group, which is primarily a betting company. Betway is their main operation. And so you wonder, why would they be doing that? Now, the very interesting thing as a business case behind stable coins is, if you look at Tether, the most profitable company in the world per employee. They made a profit last year of 13 billion with about 120 employees. How do they make that money? Well, they're investing in US treasuries and yield earning assets, and they're taking that all into the company as profit. And of course, that opens up a debate. Shouldn't the people who buy these stable coins also get some of that yield? And I'm sure that's a debate that's going to accelerate in time. And there are stable coins like Tether Gold. You know, they're not always pegged to a fiat currency. They can be pegged to silver, gold. And there's another one called Silk, which is pegged to a basket of currencies. Shivan, let's talk about this. The regulations have been slow to catch up to the technology. That's a point that Gresham made earlier. Have they caught up, or are they still lagging?
I think they are still lagging behind. I mean, I always say this, that CASP, when issuing the CASP, that regulation was pulled, the trigger was pulled too quickly, because we've had some really bad actors piggybacking off people that were using others' licenses, and it created this cascading effect of who's the ultimate beneficial owner of this entire risk. And that key individual was generally blindsided. But when we start looking at the bigger picture now, and this is something we've been talking about from a treasury perspective and a corporate treasury perspective, it's these stable coins are being issued. Let's say Supercoin, we have ZARP as well, and guys like Universal Protocol that are issuing ZAR as well. So there's quite a few players in the market, and what does this mean? Because we have our regulation in South Africa is very sophisticated. And fundamentally on that basis, it's because of the Twin Peaks model. You have Prudential Authority, as well as you have the FSCA on the other side, creating a very cohesive application in terms of financial services, but equally it's also rigid. And why we mean rigid is obviously the COFI bill is something that's coming into the market now. And
just explain the COFI bill.
So the COFI bill is the conduct of financial institutions, I think, if I'm right, Gresham, in that case, and it's sort of this overlapping regulation that it's more activity-based regulation than a particular service. So currently we've seen category 1, which is short-term deposits, and then investments, and then short-term insurance, long-term insurance fall under this. But it evolves the current way we look at regulation and the way we regulate intermediaries and financial services into a activity-based situation. And this is where it gets interesting, because we've seen regulation evolve globally, such as, I think it's the PSD3 in Europe, DORA, MiCA regulation, and these are all crypto and payment regulations that have evolved in Europe. And we've seen obviously CASP in South Africa, which is crypto asset service provider, and then VARA is virtual asset service provider, and it's a variety of regulations that happen globally. But where we're seeing the evolution of regulation and why regulation is delayed, it's Greshan's right. It's the world is moving very fast, and this webinar is a warm up to the conversation which will happen in the risk conference next year. But for the guys that attended the risk conference 6 months ago, where I mentioned the current risks in KYT, the travel rule, which is something now to know the person on the other side of the transaction, a lot has changed in the last 6 months. And if we look at the next 6 months, right, and this is more of a hypothesis and speculation, that the Twin Peaks model will become a very interesting part of the debates between the FSCA and the South African Reserve Bank, fundamentally because when you start regulating stablecoins like Circle and Tether are independent companies that are issuing this money. It's not the central banks. And that's what people need to be clear on. It's these corporate companies have some of the largest holdings of global treasury and government debt. And in the past, we've seen China and Japan hold these large portions of the US debt, but no more. They are still the top 5, but guys like Circle and Tether are stepping into this. So what does this mean for like South Africa? And when you start looking at that, this activity-based, this COFI bill sort of would eventually put this into perspective, meaning that guys like Vala, for example, if they were to issue a stablecoin, they would be regulated under a particular activity of you still have to report to a certain level within Twin Peaks to say you have deposit taking, you need to ensure systematic risk is avoided, and a variety of other deposit taking risks have to be considered. And I think that's where we are. These conversations are going to start to happen, or maybe already have started behind closed doors. But the way in which we regulate stablecoin now is really going to set the foundation for how the technology world is going to evolve on the payment side. And a very good example is when you look at Europe, for example, at San Francisco, everyone's invested in crypto and crypto rails and stuff like that. But I think it's become popularized that in Africa, mobile money is the leading taker in money movement. But the problem is 1% of the global population are owned in crypto. And that's a stat that released yesterday, which is a crazy, very small portion. So you're technically very early to this party of crypto.
Sorry, just give us that stat again. 1%, is that of Africans invested in crypto?
No, global population.
Global population.
Yeah.
Okay. Yeah, interesting. Okay. There are, of course, overlapping regulators. You've got the South African Reserve Bank, because when you're dealing with payments, a stablecoin can, you can transact anywhere in the world in seconds. And that then brings you in under the purview of the South African Reserve Bank. There was a case just this year where the High Court, I think it was Joburg or Pretoria, the Joburg or Pretoria High Court said that crypto doesn't actually fall under the definition of capital or currency. And therefore, there's no reason why you cannot ship it abroad. This all had to do, this was kind of peripheral to a liquidation of a company. But that was the ruling that came out, and the South African Reserve Bank then appealed that, and basically putting a freeze on that, which is interesting, because if there is no law that says that you cannot ship crypto abroad, and then you appeal a transaction which has, appeal a court ruling that says that, what law is the South African Reserve Bank relying on? That's a problem. However, and I know at Vala you're obliging the South African Reserve Bank, as are all the crypto asset service providers in South Africa. However, there is no law for that. So where does this leave us? We're in a bit of a limbo here.
Yeah, absolutely. I mean, we did follow that case and ruling. Right now, as you said, we are just stuck in limbo at the moment. And we're trying to do as much as we can to follow the legal developments of the case. But it's a very, very interesting case where, again, a lot of the discussions that we've had around it were not mostly around the technicalities of exchange control and how it will affect us, because obviously right now we still don't know. But some of the discussions that we did have about it was, taking laws that are a bit, I wouldn't like to use outdated, but a little bit laws that don't really apply to us that much now, and applying it to a technology that's on the total other end of the spectrum. So I think those are some of the discussions we had with that. There needs to be a legal reform around this. So I don't know what's going to happen when it goes to appeal as well. But I think that regulatory reform needs to happen, especially around exchange control regulations, or putting in some guidelines in place for us to make it clear and how to apply to us from a crypto perspective. Shivayan, I don't know if you have anything to add there.
Yeah, and I'm on the same page, and we're building this tooling currently in South Africa in combination with one of my partners, and it's this tooling that's thinking along those lines. As Greshan mentioned, it's if you're using the future regulation, how does it evolve? And my time dealing with exchange control over the last 10 years is exchange control is very boring, but also the people in exchange control, no offense to them, is they only think directly to the book.
I thought you were going to say they're also boring.
No, they nice people. I know some really nice exchange control people. They really lovely. But it's just that if you haven't been exposed to business transactions and the way business structures, particularly entrepreneurs in South Africa, structure their business, you're very against how these entrepreneurs can be innovative. And that's where the Reserve Bank really puts a lot of pressure on entrepreneurs, and they start getting sophisticated, and crypto is one of that sophistication tools. And we built this technology which helps regulators, compliance officers, legal officers, crypto asset providers, and a variety of FSPs, where you can now, if you're filtering transactions, you would be able to understand where does it fall, using a combination of the travel rule, where does it fall within the bounds of exchange control. So meaning that you can monitor exchange control without directly going to financial surveillance, because financial surveillance hasn't really stepped into this technology. But we're saying that you can allow certain transactions to happen, whether it be crypto payments or Bitcoin, under technology rule, but you're allowed to, should the Reserve Bank come knocking at any point in time in the future, you would have that as a bot reporting tool. And this is the technology in which the world would move towards. It's if the Reserve Bank doesn't step in and have these conversations, the financial surveillance and exchange control are going to be really, really stuck in this method going forward.
Gresham, just talk about the travel rule and how has that changed things for the crypto industry? And just explain what it is, first of all.
Yeah, very good question, Kiran. So a big regulation that was passed this year was called the travel rule, and crypto exchanges had to comply with the travel rule. So there's an organization called the FATF, which is the Financial Action Task Force in Europe, and they've mandated that crypto asset service providers need to comply with a regulation called the travel rule, which says that when crypto exchanges send off transactions, or when you're receiving transactions as well, that you need to tag the transactions. So again, operating like a pseudo bank, because now you on a deposit slip, you put the depositor's details and the beneficiary's details. So now if we're sending off a transaction, we put the originator's details, meaning the name of the person, the country that they're from, the wallet address, and the exchange that they're going to be sending the crypto to. And then on the receiving side, the other cryptocurrency exchange has to also ensure that they log that transaction and keep a record of that transaction. So it's kind of removing the anonymity of a crypto transaction when you're using a CASP, because now your information is going along with the transaction. It's moving with the transaction. However, on the blockchain, it's still only recording the wallet address and the block and the transaction timestamp, that sort of thing. But it's seen as a measure to provide a little bit more transparency on this crypto transactions, because the FATF's main priority, working with the South African Financial Intelligence Center, is to combat money laundering, terrorist financing, and nuclear weapon financing. So, and also to reduce fraud. So there has been, I would say, a lot of reduction in fraud through the travel rule, because now you can't, previously before the travel rule, we'd have transactions galore, just transactions happening with no reason at all, like this weird things happening because obviously there's illicit activity going on. So being able to try to tag the transactions makes it easy for us to not only record the transaction, but to do AML screening, to monitor flows of funds, and also to ensure we have a good risk profile of the client. And speaking about risk as well, money laundering risk as well to financial institutions is quite a high risk. So the travel rule helps in bringing that down, especially for crypto asset exchanges. And we've had to comply with this since April this year and build it into our tech feature, which brings it to also other points that's where compliance and risk now needs to be built into your product. It needs to be built into your system automatically. Gone are the days where compliance and risk are a reactive measure coming after the fact. Now it actually goes with the tech systems, the features you build. So that right now technology is actually transforming the way compliance and risk has to operate.
I'm just curious to find out, how do you know from the address that money could potentially be used for money laundering or for terrorism financing? Is there a list somewhere in the world that you reference for that?
Thank you so much. A good question. So firstly, as I mentioned earlier on, crypto transactions happen on the blockchain and it's logged there. It's a database. You can see all the transactions that happen there. So that's a good thing as well, because you have this data set that's there that you can access and you can use. So you could pull multiple wallet addresses out and see where the crypto was actually flowing to. And to do that, you need software. So we have tools that are out there in the market that we use to help us monitor these transactions. Some of the tools that are out there are called Chainalysis or Elliptic, and you could use this software to monitor crypto transactions. And then how do you identify whether that wallet is an illicit wallet? So we are able to use these tools to generate alerts. So what these tools do is that they scan the entire web to see if these wallet addresses are located on the dark net, whether these wallet addresses are linked to terrorist financing activity, whether it's related to fraudulent activity, scams along the internet, whether it's linked to child abuse. You know, there's a lot of different alerts that we have that we put in place on those systems. And if Kiran, you send crypto to Shivan, I'll be able to see the transaction using these tools, and it would flag Shivan's wallet as either being, high risk based on some of the categories that it picked up and attributed to his wallet address. And then if we really need more information, we'd be able to see which crypto exchange that Shivan was using. So if I was using Vala and I was transacting to Binance, for example, I would know that the crypto went from Kiran through Vala to Binance, and that part now is satisfied. The second layer is, obviously, because of the travel rule now, I can see that wallet address belongs to Kiran. He has an account on Vala, and Shivan has an account on Binance, and I can see his details. And then with a request for information, I can gather that information. Yeah. So that's how you form a picture.
Right. And I mean, the tools that you mentioned there, Chainalysis and Elliptic, I think we should give a punt for a South African developed one called LedgerCore.
Yes.
Karel de Jager from, he was with CSRR. He's now at Silver Sixpence. Okay, Shivan, this is quite, we're getting into the weeds now a little bit, and the original theme of the Bitcoin white paper, Satoshi Nakamoto, was this kind of anonymous peer-to-peer transaction protocol. That's gone. If Vala and Gresham has to identify the owner of every address that is transacting there, have we lost the grand hope of crypto being an anonymous transaction system? I mean, you can still do these transactions on decentralized exchanges, right? But when we're talking about the centralized exchanges like Binance and Luno and Vala, those days are gone. You're no longer private.
Yeah, agreed. And I think for the audience, don't get it wrong that all transactions are monitored. So keep in mind that if Gresham sent me funds and I moved funds, let's say, into something called Tornado Cash, which basically washes my money and changes the direction in which money is found. It also flags directly to Vala, but I can start moving it into something called hot and cold wallets, which are hot is meaning it's plugged into an exchange. It's basically active, whereas a cold wallet is something where it's moved into cold storage. I generally don't touch it.
I think just to elaborate on that, cold storage means not connected to the internet. Hot storage is connected. Yeah.
Yeah, and with that, if Gresham was to use Chainalysis, he would be able to see that money did go to a cold wallet. And if there was significant evidence pointing to that cold wallet belonging to me, he would make the assumption as a compliance senior that wallet belongs to Shiven in this case. So meaning that any indirect or direct exposure that I may have with terrorism or the dark web from that wallet, he would be able to see. So he would automatically flag money coming in and out of Vala. The global problem that we have, and just touching on FATF there, is there's no standardization. So meaning that if I were to reach a threshold above 50,000 that was moving through Vala, for example, and in Singapore, it's completely different. It's about 2,000 to 3,000 Singapore dollars, where that threshold is slightly a bit higher. So meaning that there's a regulatory arbitrage based on FATF thresholds. And FIC, I would say more FIC than FATF in South Africa.
Which is the Financial Intelligence Center.
100%. And that is an ongoing problem that we haven't solved yet. The international basis of that financial crime still remains a regulatory arbitrage to move money to and from. And going back into the centralization and decentralization aspect is we're seeing, yes, banks become centralized, crypto money flowing into banks, crypto flowing out into decentralized exchanges or centralized exchanges. What's really interesting is you're getting to this point where I'm like trying to phrase it in the easiest way, that sometimes your flow of capital is offline with something called zero knowledge proofs, or the anonymity is kept through zero knowledge proofs. And I won't go into too much of detail here, but I do recommend you do listen to the MoneyWeb podcast Kieran and I did earlier this year, where I did a deep dive into zero knowledge proofs and why it's really changing the way the anonymity aspect of crypto is evolving, because the zero knowledge proof technology is a way in which you can verify yourself in the internet, in the blockchain, without being known who you are, but you can verify yourself. And this is something that's an evolving technology.
Okay. Anybody got any questions? Pop them up in the chat there. We're going to continue now. I want to go back to the stablecoin issue. It is the big story in the financial system, not just in the crypto space. It's massive because it is changing the way that we transact. And you got companies like Revolut entering South Africa now. Revolut being a huge payments company overseas, now entering the South African market. And I think, Shiven, you and we spoke about this before, and you kind of had the idea that, mobile money in Africa is way ahead of the rest of the world, with things like Mukuru and M-Pesa in Kenya. But okay, so Revolut comes in, you'll be able to send money, you can pay with crypto cards, you can earn yield, you can save in stable coins, you can do a lot of things that are quite interesting. So the stablecoin issuers themselves, they start to behave like many banks or money market funds because they got large pools of reserves in cash and short-term government debt. I explained earlier how Tether made its money. That's exactly it. They are taking your dollars, investing that in US treasuries, and they're collecting the profits, the yield for themselves. So if these fintechs continue to act within payments and credit, what effect will this have, in your opinion?
So that becomes really interesting. And if you're on the call, I would recommend you also subscribe to something I call Beyond Banking. It's a DeFi treasury series where I really talk about these topics in a compliance and risk perspective. And what's really interesting is when the more people move into crypto, and this is one of the fears of the Reserve Bank, is the more people move into crypto stablecoins, particularly where the domestic currency is not being used. So a US dollar stablecoin, a euro stablecoin, a pound stablecoin, for example, you remove the stickiness of deposits that remain in banks. So a lot of you would know that from a banking perspective is you have the funds transfer pricing function within banks in which you're lending at different yields, and different yields are obviously coming from the stickiness on which your retail customers are depositing cash. But a lot of this disappears when nobody's holding USD, no one's holding rands in that, and everyone's holding USDT or USDC. And it's a very similar case in Revolut because, for example, myself in Europe, I don't hold euros in my card, in my FNB card. I actually hold USDC because I'm staking it for a yield in Revolut, and then I just swipe my debit card, which is a crypto debit card, and I can convert between EURC, which is a stable coin, and USDC. And to put it into perspective, Europe has negative rates for a very long time, meaning that the rates have always been close to zero in Europe. And when you start using USDC, because it's lending and it's yield generating crypto, I'm earning between 3 to 5% on my amounts being staked in EURC through Revolut. So this creates a very different game for banks and the Reserve Bank, particularly in South Africa, because you have something called a foreign currency account, and some of you may have one, where it's a Euro or USD card with your native bank, such as FNB, Standard Bank, Investec. Well, and you're earning, let's say, 2%, or they're not even giving you interest on these accounts. But when you start moving into these crypto stable coins, your yield is far more appetizing and encourageable to hold this. And that's one of the biggest fears for the Reserve Bank. I think when we start looking at, as I mentioned, Twin Peaks, and we're looking at how we're going to regulate these e-money issuers coming into the space of mobile money, as well as just general banking functions.
Yeah, interesting. Aggression, the use cases for stable coins, they're exploding. I mean, I've watched Valor this year in particular go through this transformation. It was a crypto exchange. I don't think we can correctly call it a crypto exchange anymore. It's not a place where you go and buy 200 rands worth of Bitcoin. It was, and you still can do that. But you really kind of moved into a different space. So you can do your payments. You have a dollar earning yield product. You have perpetual futures. Oh, should we get into that? Okay, that's a derivative contract, very popular in the crypto community. And you've got iStock, so you can buy Tesla. You can buy the crypto version of Tesla and Apple and Amazon, and pay with rands. And then just now, this last week, you introduced crypto bundles. So you're getting, the top 10 cryptos all sort of managed for you in a single bundle, rather like a unit trust. So here's my question to you. I mean, it's this mergence of traditional finance and crypto, and you really are kind of bumping up against what the banks have traditionally done. Where's this all going?
Before I answer that question, I just wanted to again touch back to a point that Shivain made earlier when you spoke a little bit about Kofi, right? COFI is not yet in effect yet. It's been in the pipeline for the last 8 or 10 years. It's been here for a long time. Institutions are waiting for it. We're looking at the timeline maybe around next year, July or August, for it to take effect. So one of the biggest elements of COFI is that if you're providing licenses, you're going to be providing licenses to a financial institution that is now activity-based, no more based on the institution. So we're not going to call you a bank now just because you say you're a bank. We're now going to grant the license according to the functions that you are doing. So if a TPPP, for example, if you're performing bank-like functions, the license is going to be tailor-made according to the functions that you're doing. And I think that's the way. I think Valley is kind of doing it in reverse as well. I think Valley is doing it in reverse, where the banks are trying to get a bit more crypto-related. Valley is also trying to expand more, but horizontally to fit customer needs type of thing. As a TPPP, we also have a TPPP license. And then
sorry, what is that license?
Oh, sorry. So a TPPP license is a third-party payment provider license. It's licensed under the Payments Association of South Africa. A lot of financial institutions get this license when they want to act as the infrastructure behind how payments are made for banks. So you get a contract with a bank sponsors you, and you can do payments on behalf of the bank, manage the payment flow in the back end. Why that happens is, again, payments are much more faster, cheaper using this method, and also it allows for a lot of different use cases. For example, everybody's shopping online, they're using Takealot, they're using Bash, they're using all these different merchants. So TPPs help facilitate that payment to the bank for these merchants. And then back to your question about the use cases of stablecoin, I'm going to take a little bit of a philosophical approach and also bring it down to the customer level. Picture a person that's living in rural South Africa in a village somewhere. And it's a person, for example, say we call it Thandi, for example, living in a village. And she has a business and she wants to make transactions now. For her to go to the bank and get cash or go to the ATM and get cash, she'll have to obviously go into a taxi or walk long distances to get that. Fine, she may have a cell phone and she has a banking app. She can make payments or she can receive payments on the banking app. It may be a bit slower. Sometimes EFTs take a while to clear, unless you want to do immediate EFT, but you have to pay extra for that. So she could use stable coins. If there's a ZAR stable coin that's around that she could use, that's very, very sustainable and trusted that we could use. And she could use that to make and receive payments in her crypto wallet, which would be on Valor. And fine, so what next? She's made payments, she's received payments in ZAR. She could now transfer that same stable coin to somebody else, maybe her cousin or another business partner in a different country. And they could use that ZAR now from the other country to make purchases in South Africa online on a merchant in South Africa who receives that ZAR stablecoin. So it's I think that we went through a stage with the internet as well, where information now is borderless. You want to make a friend in China, there's no need to write a letter and send it to them anymore. Add them on Facebook, information is flowing quite fast. So I think we're going to get to a stage now where transactions are going to be in the same way. Information is passing faster, it's going through the system faster, it's going overseas faster. And I think stable coins right now is a dip testing to see, if crypto is okay. Again, it still comes with a lot of risks. Remember that the fraud risks are still there, AML risks are still there, cybersecurity risks are still there. So I think it's testing the waters. That's what I think. Yeah.
Right. I mean, it's interesting about Rand stablecoins. Shiven, I think you and I, we spoke about this as well, where South Africans are importing goods from China and paying with Rand stablecoins. And that raised the question for me, well, who would accept Rands? And this is a product of our exchange control environment that we've had for so long, yes, since forever. But then it makes sense when you understand crypto rails, because that Chinese exporter can take those that ZAR stablecoin and immediately convert it into a US dollar stablecoin or a euro stablecoin at minimal cost. I mean, fractions of a cent. And then you start to extrapolate, well, what impact would that have? You know, if all of a sudden we had these people who found an appetite for ZAR stablecoins, like Gresham was mentioning, the lady who's got a business in the rural areas. But what about the guys who are importing goods and want to pay without having to go through and get all these approvals? You know, when you're sending money through the banking system, you're always asking for permission, and you got to select a BOP, a balance of payments code. It's complex, it's sticky, and it's just out of date, right?
It is, and I mean, we've seen crypto alongside fiat create this new payment strategy called B-root payments, in which they're undercutting SARS. And obviously, I'm sure, hopefully, someone on SARS is here. But yeah, that's you would have to investigate what B-root payments are. But it's something that's become popular in terms of importing. But let's take, for example, doing a cross-border payment in simplified. I am buying goods from Gresham in China. I'm paying him $100, and he's sending me $100 worth of t-shirts to South Africa. Currently, that process works in South Africa. I'm going to spend 2% buying $100 at any bank or 1% at an intermediary. I'm then going to wait almost a day or two for the money to hit Gresham's account in China. And on top of that 2%, I'm going to spend 500 Rand as a SWIFT fee, which is standard across the payments within the SWIFT network. That's exorbitant as a merchant, but now I am spending roughly maybe 1%, maybe even less, in purchasing some USDT or USDC. I mark Gresham via Binance or Vala, for example, pay them via USDC to his KuCoin account in China or anything like that. And all of a sudden, this transaction happens within 5 minutes, maybe even less, depending on the chain. So remember that the SWIFT network is generalized, right? Meaning that any bank connects to the SWIFT network. However, when you play in blockchain merchant payments, there's a variety of chains, meaning that there's an Ethereum chain, there's a Polygon chain, there's a Tron chain, and all of them have different fees. And the busier they are, the higher the fees. And that's become an ongoing problem in the blockchain ecosystem, because everyone's trying to solve the fees issue, which is called gas in crypto. So obviously now Gresham receives the USDC, but the problem I have in South Africa is, because it wasn't registered with the Reserve Bank that a particular amount of money went out. When I receive those goods for custom clearance doesn't accept my transaction via my phone that I've done a USDT payment. This causes obviously friction within this import payment structure. And where we've built this technology from a Novak side in collaboration with Sambe Consulting, that this technology now is able to support technology payments. So for example, if you're buying a particular technology within the crypto space or receiving something within the lower than 50,000 Rand, which is generally the threshold, that's coming through maybe Post or DHL or something like that, you're able to transact using USDT, and these exchanges are able to monitor these transactions within the bounds of exchange control. We're not saying we're replacing exchange control, we're just saying we're giving these crypto asset service providers tools in which, as regulation develops, they're able to evolve with our technology. And that's something that's supporting the ecosystem. But when looking at crypto payments and stablecoin payments, it's become really interesting. We've seen technology where I can go borrow money from any person on chain, and I can go buy goods. And then because I have confidence, or they have confidence in the protocol that I can pay them back, they're going to charge me a yield. And that yield is maybe 3 or 5%, and I would pay them back in stablecoin. So this ecosystem is evolving. I think exchange control is still thinking backwards in terms of where they are. And I do hope the system becomes less or frictionless in this process as we start moving into crypto rails, because the Reserve Bank has to evolve. You have to support the technology advancements. You can't just rely on someone paying 2%. Your GDP is never going to grow if all these importers and young business owners start paying 2% at banks. It doesn't really support growth in the long run.
All right, we're getting near the end. Just a quick question for each of you. The hour is nearly up. So, Gresham, my final question to you: how does blockchain transparency strengthen anti-money laundering and fraud detection? You may have touched on that a little bit earlier, and also sanctions monitoring compared to traditional banking. Blockchain's got advantages, so maybe just quickly answer that one.
Yeah, so obviously we're able to obtain data. So by obtaining data, you take the data and you're able to draw insights from the data. So that's what being able to do transactions on the blockchain allow us to do. It's a plus for us because now we're able to use this data and build things with it. So we take this data now, we can build another tool that monitors the data and draws insights from that again on top of that, and now feeds into our fraud workflows, feeds into our security workflows, feeds into our AML workflows, and then help ensure that not only are we complying with the law and protecting Vela, but we're also protecting the customer on the ground, making sure that we're stopping this type of risk from affecting them. Again, I just quickly want to touch on we're also integrating AI. So AI is something that's coming up a lot, especially the integration of AI in Web3 and in crypto-related features. So AI is now going to be like a third layer where it's going to be used to automate this function. So normally you're going to have a human being that's monitoring this. AI agents are actually going to be used to monitor these things. So imagine having a record of all the transactions, and then you, on top of that, using something like Chainalysis to investigate it and categorize it, and on top of that, having an AI agent to review it, and then a human at the end to review what the agent did in real time. That's a proactive approach to risk, and there's a lot of benefits that can be done with this type of technology.
Very interesting age we're entering into. Shiven, final question for you is, we're talking about risk and compliance professionals here. What skills do they need when we're talking about this AI-powered, blockchain-enabled financial sector? It's going to have to be real time, just as Gresham explained. You can't be looking at things that happened a week ago or yesterday. It's got to be in real time.
Yeah, and I think the next step is you have to just jump into it. You have to. I don't think like books are going to help you. They're going to help you on a very theoretical level, and I've seen that, and like I've done that sort of work in terms of these textbooks are telling you, oh, this is how a blockchain works and stuff like that. You really need to watch trusted YouTube videos, trusted practitioners within this ecosystem, because there's so much happening every day, whether it's on a new chain, there's a new risk, there's something developing. Because when you watch these YouTube videos and these podcasters are talking about, hey, something's developed. A good example is I was listening to one of Kieran's podcasts on MoneyWeb, and he was talking to Pat the other day, right? And what was interesting there is I started writing down these ideas that are coming from the podcast, and you just throw that into ChatGPT, you throw it into Cloud, you throw that into any agent you're using, and what you want to do and identify there is allow it to brainstorm with you while you constantly conversate on the questions you don't understand and the fundamentals that you don't understand, and put that into your perspective, right? What does it mean to this bill that you read every day? What does it mean to the FSCA, the FIC, the COFI bill, the Exchange Control Manual? How does it impact in these little silos? And that's a really great starting point. And that was using AI to brainstorm and use it as the second brain, in which I call it, to help me navigate this changing landscape every day. It's something that's a huge advantage. It's just throw yourself in. And as Gresham said, take 100 Rand, set up a Vala account, buy some crypto. You're just going to have a blast playing around with it. And then get your friend to sign up, get your family member to sign up, and just transact. Send them to USDC. Then maybe stake the money. If you then
staking is the crypto equivalent of earning a yield.
100%. And then learn about airdrops and what does it mean and stuff like that. And Vala has a very good knowledge base, and so do many other exchanges as well. So depending on your level, start simple. 100 Rand gets you a long way in crypto and just getting started, and just play around with it. I think that's the fundamental things from a compliance side.
Yeah, exactly. It's how you get started, and this is I don't know if we can say this is financial advice, but how everybody gets started. Put in $100. It's 2 cups of coffee, and start watching Bitcoin, and then start paying attention to some of the other cryptos. In my opinion, there's only a few dozen that are really worthwhile, apart from the stable coins, which have got utility value use cases like remittances across border and so on. But we're talking here, this is the new frontier of finance. It's been a fantastic discussion, actually. I learned a lot from both of you. So I want to thank you very much for coming on. And we should probably do this again, because I imagine in a month's time, we'll be looking at a different landscape. Plus, of course, the crypto market is down quite substantially at the moment. And, this is when people get nervous and they start they lose a bit of interest in it, which is exactly historically the wrong time to, this is the time you should be paying attention to it.
Yeah, agreed. And looking forward to the next one as well.
Good. Well, thank you very much, Shiven and Gresham, for coming on. And thanks for everybody who's been listening. I hope you enjoyed it.
Thank you so much. Thank you.
Thank
Thank
you.
you, everyone.
Take care, everyone.